Well, you asked for it, you got it. A nothing burger from USDA. Well, this is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for December 9th, 2025. Yeah, you got to call it a nothing burger. The USDA basically punted on everything. No changes, no new sales data this morning, um, no USDA announcements. And, you know, worldwide, they did add some more supply to wheat, but we've known that was coming, right? And so we're back to just trading technicals, sadly. What did we get? Well, we got a 6 week low. Is that right? One, two, three, four, five. 6 week low in the soybeans. We have given back a bit more than half of the October rally we had. Remember, we went from 10.12 to 11.69, $1.57. Well, we've given back just over half of that, and we settled under that 10.91 level. The next downside risk is 1072. That will be a 62% retracement. So again, me saying it's a risk is not me promising you it's going to be there. It is just a risk, boys and girls. No new crop beans, solidly under 11 bucks. That had been a big level for a lot of producers. Remember back on October 1st, we were at 1048, sub 1050. Guys were worried about sub $10 beans. So we've given back a little bit, not quite half, not as much as we have in the spot month. So not a complete disaster there, but still under $11 might be something that is gonna we're gonna have to watch here as we finish up the year and then wait for the January report. If we hit 1090, that'll be half of the last rally we had, and it was an 83-cent rally. So um, this level's to watch there. So nothing really changed. It was nice to see March corn get above the 200-day moving average. That's positive. You've got D's corn, which only has a couple days left before it goes by the wayside completely. But I would say that the one positive was the fact that March corn managed to finish higher on the day and above the 200-day moving average by a penny, or actually by half a penny. 447 and three quarters, excuse me, 447 and a half, and we is the 200-day moving average. We settled at 448. So is that a victory? We'll see where we are on Friday, kids. But positive nonetheless. And you've got D's new crop corn up a penny and three quarters at 465. Again, we need to see D's new corn above 475 to really get the ball rolling out there. And in the wheat, I'd say again, despite the fact that it was, worldwide they added more wheat to the supply. I think it's already been factored in. Good thing is we did not make new contract lows. They did not completely hammer it. Um, we're going to see what happens Friday. So I talked about this before. Lots of times people hedge just for the report, and it's a day or two after, sometimes 3 days after, where the market really just digests everything and gets through it. One of the drawbacks to releasing the report during the business day, as opposed to the way they used to do it back in Jurassic Park days when I was on the floor, was they would release the report and you'd have a couple hours uh, to get chew through it, so people knew what they wanted to do. First 5 minutes of trade was crazy, but once we were done with that, it kind of settled in. So um, in the cattle, quiet day as well. $6 trading range in feeders finished today slightly lower down 0.275 at 330. I think March feeders guys are still wondering, can we get after it and get up in that gap? We've had a tremendous recovery. We're kind of paused here. We did claw back just about half of the losses that we suffered. Remember, if you look at that March contract, people forget, we dropped 83 cents, right? From 378, and our low tick was 293. We're hanging out here at 330. There's a gap everybody's fixated on, which gets closed at 345. We get into the gap at 337. So can we get in there? I don't know. We'll have to wait and see. Money flow is probably going to be the biggest issue there, but kind of a quiet day. Live cattle, fat cattle finished up 20 cents, only a 3 cent range trading out there. I say only because we've had a lot of other activities, well, where we've had a lot bigger days as of late. I will say this, we did make a new high for the move in April fats. We're back to, I got to call this a 1 month high, possibly a 5 week high. And We did manage to just squeak out a higher settlement. For a while, it looked like it might have been a bearish hook where we made a new high and settled lower. Again, I think I'm more concerned about where we settle all the week. So all in all, big picture, it's been a good recovery in cattle. Take advantage of it. If you've got puts on, we just rallied $40 in the feeder cattle in 8 days. Roll those puts up, capture that revenue. You don't want to be left holding the bag a month, 2 weeks from now if we get back half of the 40 we just gained, right? So rather than trying to outguess it, just head where you can, do the best floor that you can, stay involved with it. If you're selling animals and you're worried that it's going to go higher, absolutely, you can re-own them with cheap calls. Stay in the game. Um, Finishing up with the lean hogs, kind of a tight trading range there as well. They came after early, but we did recover a little bit. You still have April lean hogs at 86.50. We've had a good 38% retracement of the last sell-off there. What sell-off am I talking about? Well, we went from 94.70, almost 95 cents, down to 81. We've clawed back 38% of that, and that's kind of where we're sitting. So we've had a recovery. Again, that's an opportunity for anybody that's long these animals with no hedges. We didn't hit 88. 88 will be halfway back. We've been dancing here at 86 half for 3 days now. We'll see if that holds. It certainly would be nice to see higher prices. I don't think this is a time where you would be selling calls to pay for puts, but I would definitely roll my puts up if I've got them. And what's going on in the outside markets? Crude oil kind of, under $60. That's going to put some things under pressure here. We're trading at 58.12. The number I'd be worried about is 55.12. That's the April low from this year. That if we take out 55.12, that's going to be a new 5-year low. So I got to continue to watch that. Why is that important? Well, it kind of flows through all the rest of the commodities as well. We may get a little chance here if you use a lot of diesel. I would watch diesel and see if we slip below 220. That might be something end users want to keep an eye on because we are moving a little bit lower here. Heating oil is trading 226. I'm talking to Jan. That's the lowest price we've had since October 22nd. So a 6-week low there. If you're a buy the dip type person, that's great. The next old low we have to worry about is where we were on October 17th, 212. So we're trading right here at 226, 225. There's a chance here that if we get below 220, it might be something where end users want to take a look at doing that, especially because, at the end of the day, diesel oil is heating oil. And it is winter, and I think a lot of people maybe got caught thinking that, we're going to have a spike because of the cold weather. Hasn't really showed up yet. So on that note, if you're not following me, follow me on social media. You can find me online, Robinson Ag Marketing. If you want to get my daily letter, I send out a letter every day, Monday through Friday. And then on the weekends, I spend about 4 hours and I do a longer term outlook. Unlike a lot of other people, I cover a lot of markets. I try and give you a neutral position. I try and give you good support and resistance. I can entertain both fantasies, bullish fantasies and bearish fantasies. What I'm trying to do is capture the meat of the move when the market gives us good prices. And at the end of the day, that's how I build my marketing plan. So if you're looking for help, give me a call, 312-638-8868. I hope this information helps you and have a great rest of the day.